27, 27, 25. This is the daily chart right now, trying to potentially form here an evening star reversal candle, but we won't know till the trading session is out. Let's go take a look at, well, first let's start with Apple. So let's start with what Apple is doing. Traded as low as about 501 early this morning. Right now, trading out at 503 and a little bit of change out there. So I'm going to start off with the weekly chart. I showed this to clients and I really hadn't paid attention to this for some reason until I started to take a look at different time frame charts. It's always important to take a look at different time frame charts. I like to look at the weekly, the monthly, just for whatever reason. I hadn't paid attention to the mere fact that Apple was trading below the swing point for May 18, 2012. The low of that swing point, 528.66. And Apple came down, and that does, on the weekly chart, that had 101 million shares. Now, the first time down into that, 127 million shares the week of November 16th, bounced up for 2 weeks, and then boom, came down back again, 140 million shares the week of December the 7th out there. Since that time period, meaning from December 14th forward, so we've got 2, 4, 5, this would begin week number 6, trading below that swing point. What is important about that? Well, what's important about that is when you take a look at being able to project where price will go, one of the first things that you want to take a look at on any chart with regard to the time frame it is that you are trading in. With regard to the time frame it is that you are trading in, you want to go identify where's the next swing point, or where is a cluster of swing points, or where is a consolidation area, because that is where, once you are above or below a swing point, where price is likely to travel to. Well, in the case of Apple, if you take a look at that swing point low, what you do is you come back to November 25th, 2011, right after Thanksgiving, not this past Thanksgiving, but a year ago Thanksgiving, when Apple had traded down to a low of 363.32. In fact, from 363.32, really never looked back. There were about 4 or 5 weeks where maybe it looked back just a tad, and that's a swing point, quite frankly, that it just broke through. So traveling below that area says just a natural gravitation would take you down to about the 363. Maybe there's a little congestion up here. Maybe it'd be up to the highs of about 426. But that 426 to 373, that is where Apple wants to get through. Now, what it needs to do here, needs to get through the swing point low, as you know, 505.75. That is the number that you want to be paying attention to. That certainly is what we're going to want to pay attention to. And of course, we have Apple right now trading at 503.47. So when this, and it is not just about one stock, but with regard to the weighting structure inside the NDX 100, inside the NASDAQ, has some weighting structure obviously inside the S&P. These markets are not going to move higher with the NASDAQ moving lower. So today's a critical day. The line has been drawn in the sand as we switch over to the daily chart of Apple. And what you'll see here on the daily chart, you'll see really three. We're just going to call, well, we got 3 real reversal candles out here. And candles are, folks, they're primarily reversal candles. As Apple was moving down on the daily basis, as it came down into November 16th, formed a hammer candle. Really important candle. In fact, I think one of the most important candles out there from a bullish standpoint, because when you close below a hammer candle, if you're long, you're wrong. Well, when you start taking a look at that cascading event where you've got really no support until you get down towards that swing point low on the weekly chart, and it's really the same on the daily chart as well, you get a close below 505.75, and it could be sayonara out there with regard to Apple on it. And what I mean by that is it's got another 200 points to the downside. Now, if you move over a little bit to the right, and that had 45 million shares out there, the next time that the bulls showed up as that area was being tested was on December 17th. Apple did get down to a low of 501.23, did it with 27 million shares, so it tested that hammer on lighter volume out there. It says that the bulls were still in force. We're going to see, this is the area here, we're going to find out today whether the bulls are still around or whether they're ready to let loose and continue the selling inside Apple stock. The next time we had a little hammer, this is a smaller hammer candle, but it's also as those lows were being tested, December 27th out there, 16 million shares. So on the way down, you can see you came down with quite a bit of volume. Apple, if you're watching my chart out here, you can see Apple as it was forming that November 16th hammer candle, also in that extreme oversold condition. We know that the ways to work that out, you got to digest. And you either digest by moving sideways to moving higher out there. In this case here, Apple had its first bounce. And as it came back down, not enough conviction to the downside as it tested that area, formed that bullish engulfing candle on December 17th with 27 million shares. And then that next test down there was December 27th with 16 million shares. So today, and I expect in that first 5 minutes, we're going to see huge volume coming out of Apple. You can see that is where the line is drawn in the sand. That is what we're going to be paying attention to throughout the trading day. I am certain of it. As we pull back here and we take a look at the daily chart, what it's really going to be contending with, in fact, you always are taking a look at where is the volume out here, because that is another area where you could find some support. In this case here, that volume bar goes back to February 15th. That is the largest volume bar as Apple would, if Apple gets below and stays below that 501 level. That is February 15th. The price range on that is 496.89 to 514.26. Why is it important to take a look at that long-term chart, put it together with this chart? Because most of you out there, 70% of you out there, actually own Apple. You own Apple. It's inside your pension plan, your 401k plan out here, and you've already had a 200-point move to the downside out here. Now, maybe some folks some funds actually sold during that first down leg. But today, I'd say the number to be paying attention to, even though we've got those hammer candles out there, even though we've got that bullish engulfing, is really going to be February 15th. 496.89, 53 million shares. You get below that, and you will see Apple move all the way down to that 360-ish range out there. If we go take a look at the Qs, the ETF structure out here, what you're going to see here in the Qs here, where they've been struggling, they've been playing in this little trading range. That was the gap up from January 2nd out there. That gap up has held as a very strong support area. The low of that gap, 66.48. That gap has been tested a couple of different times out here. It was tested on January 4th, January 8th, and January the 7th out there. Each time also with lighter volume, gapped up with 70 million shares. So that's also what you're looking for here from the Q standpoint. If you get a close below 66.48, that window is open for business and says that the Qs will go ahead and travel down post-haste to the December 31st candle. The December 31st high was where you would see your next test, and that is at the 65.25 level, which you can also see as you take a look at the Qs out here. If you look at the Qs, you can see where they've struggled to the upside happens to be the high volume downdraft day. It's not a swing point. It's not even a gap down. But if you go take a look at October 19th out there, you'll see 75 million shares to the downside. You had the Qs trade from a high of 67.27 down to a low of 65.60. 67.27, you can see that area has been held and checked. In fact, on Friday's session, getting up to 67.29, 21 million shares, closing back at 67.26 by uno penny out there. And you can see, so it was Apple just simply not Apple, but the Qs struggling to make it up to the above that resistance zone out there. So it is all about the NASDAQ, the Qs, Apple, and that's what we're going to be paying attention to. But we come back, we'll go take a look at some of these other equities or markets that are popping out here, gold, silver. As far as other movers in the market, the leading the charts, the upside right now, you got Transocean, RIG, closed at 54.09, trading out at $55 to the downside. Infosys right behind Apple. They closed at 52.22. They're trading at 51.70. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and we've got gold here trading up $11 out at 1672.40 as we take a look at the gold chart out here. What you can see, you'll see a blue line and a red line if you're watching on Tiger TV. That blue line is the 20-day exponential moving average out there. That price point is actually at 1672. It's trading at 1672.10 right now. What you can see here is that for some reason has held gold in check here, and it's done it for quite a period of time, really ever since November 28th out there. That has acted as a resistance zone. Of course, gold does have a little hammer candle down here on January the 4th out there. That is a bullish move as it was testing the 1-to-1 A to B equals CD down, which was 1629.70 as the projection out there. But of course, gold also having to work off its oversold condition out here. And until it gets above that 50% line and stays above that 50% line on that relative strength area, it is really showing more relative weakness than it is relative strength out here. And as we have the U.S. dollar index beginning to move up, right now only up 2 ticks out here, that will continue to put pressure on gold. If we take a look at silver, high-ho silver, having a better day here, up 2.5%, 2.4% here right now. What we can see silver is doing, if we take a look at silver, I want you to pay attention to this candle here from December the 20th. That's that's the little downdraft there, the range of that. We're taking a look at the body of the candle, the body of a candle, really the essence of price out there. The open on that was at $31.05. The close is $29.96. And what silver has not been able to do, and what it's trying to do today, the attempt that it is making today, it's trying to close above the body of that candle. Obviously, a lot of time left here in the trading session. You can see as silver was also making the same 1-to-1 A to B equals CD, and the 8-point on silver on the daily chart was the high of October 1st out at 35.44. Your B point was the low down on November 5th out at $30.65. Makes a retracement up into the November 29th time frame. That was your C point. A to B equals CD. That price projection, $29.60. Of course, on the 20th of December, gets down to a low of $29.64 out there. You got to love how that works. You did have not a hammer candle, but you did, as that area was being tested on January 4th out there. Yeah, you did have it's not a reversal candle, not like the hammer candle we saw in gold, but you did see the bulls really step in and protect those lows. So you can see that silver has been consolidating sideways, making slightly higher lows out there, but still struggling to get outside of the body of that candle of December 20th. You get outside there, and where silver will head to is probably that 50-day moving average. If we take a look at retracement levels, let's see if that also joins forces out there. Well, you can see right now where it's trading to is nothing more than the dead cat bounce, and that's just coming off of the C point, the high of November 29th down to the low that was put in on January 4th. So only being able to make a dead cat bounce here right now. Silver, even though it's having a good day, not yet off to the races, at least not in my book out here. If we take a look at light sweet crude, not really showing any bearish relief out here. No bears on this leg up from the December 11th low when it was trading out at the 85.21 level. No bears, really. Only bears that showed up were for one day, December 21st out there. Took a little rest on December the 24th, and the bulls showed right back up for work on December 26th out here. What light sweet crude is doing, trading into a 0.618 retracement off of its move down off of September 14th out here. If light sweet crude does not start to reverse down, we'll likely see light sweet crude move up to about the $97 level. That is the 0.786 retracement. So 95.37 to 96.92, 97.77. That would be the next mark on the way up. Of course, light sweet crude is in the overbought territory. So really, I'm just paying attention for the bears to paint a sign and show up. If we take a look at natural gas, look at the continuous contract out here. We did have natural gas move through that longer-term rising price channel. Did that on January 2nd. Moved to a lower low. Well, it wasn't a lower low. Came back and tested the shadow of that candle from January 2nd. And that was on January 19th. Yeah, on Friday, what you can see is what natural gas did. First, number one, it was moving into an sold condition, had to work that way off. And also when you break a trend line or a channel line, you try to get back up into it, or at least test it. On Friday, that's what natural gas did, was test that area. Today, getting back inside that price channel. We'll see where natural gas closes today, but if natural gas closes back inside that channel, it was a false break to the downside. 877-927-6648. We get back, we're going to go pay attention to Apple, see how it's going to open, what kind of volume, and whether the bulls are going to step in and support that 501 area. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 2 points. S&P's down 1.5, composite off 11, small caps off a point, and Apple down $20 and change, trading out in the $4.99 level in the first minute of trading out here. We had about, how many million shares here in that first minute? It was 990,000 shares and 842. Let's go ahead and put this on the, let's go back and take a look at the daily chart, and let's go draw the lines in the sand here. So we're down below the hammer candle out there. That is the 505.75 level. That is the first place you're going to be paying attention to. Where we're really going to be focused on is going to be that February 15th high volume day. That's the 496.89. So we're going to draw a line across the screen here. That is the black line that you'll see on your screen. So far this morning, Apple in the, not the pre-market, but right now, as the market opened, 498.51. So let me come down and just write that number on a pad of paper so I don't have to keep coming back and taking a look at that February 15th area. So where's it low? 496.89. 496.89. That is the bogey that you want to be paying attention to on Apple, trading out at 503. So we'll be paying attention. We'll go keep this on a shorter term chart here, the 5-minute chart, so we keep coming back in and paying attention to watch what happens here, because it's going to be critical with regard to the markets. If the markets want to continue higher, they're going to have to get out there and support and buy Apple. Leading the charge here to the upside this morning, you've got Amazon up $3 and change, almost $4, up 1.5%. You've got Verint Systems, VRNT, up about 9%, up $2 and change. You've got Nice Systems, NICE is the ticker symbol. They're up 7%. Rig, Transocean, they're up 3.5%. LinkedIn, LNKD, up about $1.75 out here. Sears Holdings, SHLD, up 4%. Ixia, XXIA, up 8% this morning. Harry Winston, I believe Harry Winston is it being acquired or an interest being taken in it? Let's see, what's the deal? They struck a deal with luxury brand segment for a $750 million buyout. Not bad. Coach out there having a good morning. COH, the ticker symbol, up a couple percent. To the downside, Google in a, looks like a sympathy trade out here, down about, not actually right now, only down about 50 cents out here. IBM struggling off $1.63. Cirrus Logic up off $1.56. Vera Bradley down $1. NAM, Thai Electronics, NTE off $1.17. Constellation Brands, the beer firm out there, they are off here about $1, down 2%. Our call-in number, 877-927-6648. So let's go take a look at a couple of these other stocks out here and we'll keep coming back to Apple. Take a look and see how it continues to trade out here as it provides us with signals as to what it wants to do. Amazon, let's go take a look at Amazon. Amazon taking out another swing point out here today. Amazon is taking out the January 7th swing point high. That level is 269.73, trading out right now at 272. Volume on that swing point was 4.9 million shares. So far today, up with 416,000 shares in only 8 minutes of trading out here. If we take a look at where is the next likely spot for Amazon to head to, let's go put this on a weekly chart. So let's look at the weekly chart of Amazon. Let's take a look at expansions of swing points. We'll take a look at two expansions. The first one is going to be off of the September 14th high down to the November 16th level, that low, and the 1.272 expansion gets you up in about the 276 range. So again, trading out at 272 and change. Let's take a look at a larger set of swing points, or the next set of swing points going back to the left hand side of the chart, because I can't go to the right hand side of the chart. That's why we use the expansion of these swings. We're going to take a look at October 14th high. That level is at 246.71. All the way down to the low from December 30th. So it's up above that 1.272. That's what it hit here on Friday, or last week, I should say, when it closed out in that 208 and or 268 and change level. So right now, it looks like Amazon headed towards the 276 range. If it, let's take a look at A to B. Let's see if it's taking out a B point out here. So the B point is going to be and this is smaller A to B equals CD, is December 21st. And Amazon, that was 16 million shares up at 263.11. Again, that was 16 million shares. And last week, 15.5. So pretty close. At taking that out. I did take out the swing point, the September 14th swing point with volume out there. So if we take a look at the small A to B equals CD here on Amazon, also set to go to the looks like about 298, maybe about the 298 range. A to B equals CD. Let's go take a look at IBM and see what IBM here is doing. That is right behind Apple with regard to, it's down $1.73. So let's go take inside the Dow 30 and switch over to IBM. That is the number one weighting inside the Dow. And we can see here IBM looks like it wants to come back and test the where it most recently broke out, which was December 31st. The high there, 191.68. You've got this little hammer candle out here as well that it's testing the highs right now, which was created on January 10th out there, 3.6 million shares. It did test that area on Friday with 3.8 million shares and rejected it. We'll see if IBM wants to, if it closes below 192.96 today, and it's 196.82 right now. Suggests that it wants to come down and test at least the high from December 31st, which is 191.68. Let's go take a look at the currency market here, see what we have going on in the currencies. We'll start off with the Japanese yen. Japanese yen taking out the 1.618 expansion, doing it on Friday, or doing it on Friday. Really tested that area on Thursday, continued with its uptrend here in the area of really being getting back to that extremely oversold condition out here, but still. The bears showed up in the Japanese yen. They did it for 2 trading sessions, January 7th and January 8th out there. And then the bulls went ahead and stepped back in. If this area here, let's see where the next expansion zone is on this, if I can identify that. I don't know if I've got that on this chart. I have to use a different tool. Let me try this one. I'll have to do that during a breakout here with regard to the Japanese yen. But again, this thing it's setting up. It's had one heck of a nice run, but it is going to set up for a pullback out here. Let's go take a look at the euro. As we take a look at the daily chart on the euro, we've got the euro trading out at 133.458 right now. The euro here trading above. It's trading into the cluster of swing points that go really back into the March 27, 2012 timeframe, as well as testing the swing point high from February 24th, 2012. But we can see the bears still not really showing up here. The euro could trade up if the bears don't show up in this currency pair. The euro-U.S. dollar currency pair, you're looking at an expansion into the 134.750 range, which will take you back to the highs of that November 24th, the highs of November 29th, February 29th, my apologies, February 29th. That would be up at the about at the 134.844 level out there. Let's take a look at, let's go around the world here just for a bit, see what we have in trading. The DAX here, if you take a look at the DAX, just as we were looking at in silver, you will see the DAX, which has, certainly was the strong index out there. We've got the New York Stock Exchange. We'll take a look at that, the DAX, the small caps, Russell 2000. So go take a look at those. If we take a look at the DAX, and again, remember the body, really the true essence of price out here. After the January 2nd gap up, strong day across the board here. The DAX has not been able to take out the body of that candle. That's the close of 77.78. How about that for a close out there? Also hasn't been able to take out the lows. So this just really consolidating sideways out here, but kind of wants to make you say, something to think about. Let's go take a look at the FTSE. The FTSE over in the UK, the FTSE out here making it to the 1.618 expansion. I believe it is. Let's go take a look at that, make sure of that. It has made it to the 1.618 expansion, doing that here this morning. The 1.618 expansion we're taking a look at is off of the swing point from September 14th. That high in the FTSE, 59.3262, all the way down to the low of course, you guessed it, November 19th out there. That low, 57.3974. If you take your Fibonacci ruler and you go from the high of September 14th down to November 19th, and you expand that out to the 1.618 level, that will take you in about, looks like 61.34 and a little bit of change out here. The FTSE this morning getting up to a high of 61.3417. You gotta love how that works out there. Still no bearish candles showing up inside the FTSE. Really did try it on the January 7th and 8th before it went ahead and gave it up. So now we've got the FTSE hitting an expansion level and pulling back as it should. We'll see if the bears actually show up. Let's go back to Apple, take a look at the chart, see what it is doing. It is trading off $16 here. Right now, let me get back to the actual Apple chart. I probably ought to just have a tab here just simply for Apple since we've got to. In fact, I'll do that. Just make it easier. So Apple here, and we're looking at a 5-minute chart. So the first 5 minutes moving down with 3 million shares out there. Then bouncing up. This is the 5-minute chart. Of course, what you can see here, getting to that extreme oversold condition, getting down to a level of about 13 or lower in the RSI. Of course, when you get into oversold or overbought, you've got to go ahead and start working that off. That's what it did. Apple here also creating on the 5-minute chart, a little bullish engulfing candle out here. However, doing that not with any kind of conviction to the upside. So as it's had selling to the downside, to the upside, only 1.392 million shares. So right now, all Apple is doing is working off that oversold condition out here. Let's go. So we'll keep coming back to Apple. We'll take a look at, let me see on the daily chart here. We'll go back and just simply take a look at time frame. So you can see here, really up against, here is where the that is that February 15th day. And what you'd really want to see today, if there's going to be a rejection of this area, in my opinion, what you want to see is a close back above 514.26. That's the February 15th candle. Well, most certainly you want to see it above the hammer candle, which is at 505.75. But I would say if there's going to be any reversal, you want to see it travel above the February 15th high, 514.26, to sort of give you the signal that it is out of the woods. Let's go take a look at a couple other stocks here, popping and dropping. Why don't we go look at something nice out there? NICE is the ticker symbol. It's always good to do something nice each and every day. Gapping up. NICE is having a nice day out there. Gapping up this morning, up about 6%. This is NICE Systems Limited. Let's go see how they end up with that ticker symbol of NICE. Is that a ticker symbol that you'd like if you were taking your company public out here? While my system here loads, we try to find out what NICE actually does. Let's go take a look at their nice-looking stock chart, or at least it is today. Oh, not so nice as you go back to the left-hand side. So as we take a look at NICE, what it is doing, it is coming back and trading above the area where it last broke down. This equity here broke down on July 31st. Closed out the session at $36 even, Steven. Gaps down the next day with 1.6 million shares. Gets down to a low of $30.17. Ultimately makes a lower low on August the 2nd, the following trading session, out at $29.51. What NICE is doing, though, it has gone ahead and repaired that window, so it is no longer a resistance zone, that being the July 31st level out there, that being the 35-38 range. So now let's go take a look at NICE and see if it's taking out a B point of an A to B equals CD up with volume. The B point on this would be your October 4th candle. That high, 34.34. Volume 201,000 shares. Well, so far today in trading, it's done 222. So NICE making an A to B equals CD up, having a confirmed A to B equals CD up. Let's see if that takes it back to the top of its range. Your A point being that August 2nd low, 29.51. Your B point being the high that came in on October 3rd. Your C point being the low on the 26th of October, down at the 30.64 level. It's already gapped up into the 1 to 1.272. Looks like it wants to head to the 1 to 1.68. 39.42 takes it back into its highs. The swing point out there for the high is March 29, 2012, $40.04 down to low of 38.89. Now let's go see NICE Systems Limited, a software company providing internet-based solutions that capture and analyze interaction and transactions, realize intent, and extract and leverage insights to deliver impact in real time. So that is what NICE actually does. Let's go take a look at the longer-term chart out here on NICE. So let's take a look at the monthly chart. So the monthly chart, not too bad. No volume at the highs. In fact, it has volume off of the highs, unfortunately. Back in November of 2007, that volume out there was 13 million shares. You can see the first time up there, the second time up there, I should say, in March of 2012, only about 6 million shares. 6 million going against 13, not enough to bust it up. NICE is going to try to get back to those swing point highs. It's going to need volume to take that out. Otherwise, just consolidating from $40 anywhere down to $29. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow off 22 points right now. S&P off 5 and in the skies. Celestial-wise, coming in yesterday was our next Venus-Uranus. Was Venus square Uranus. And if you're watching us on Tiger TV, I went ahead and I've shared this chart here with you. If you took a look at all the different aspects out there, the lunar trading strategy, full moon, new moons out there. If you took a look at the single best celestial strategy out there would have been understanding Venus and Uranus out here, because it worked 100% of the time at identifying market highs or lows. So the most recent one coming in yesterday on Sunday. Therefore, you don't know whether it's really a Friday or whether it's the Monday session where you might identify a high. And so at this stage, if we take it, I plot this on the S&P 500. And so how did this know, millions and millions of years ago, that today would be a market turn, and maybe some of the news that would lead us down might be, to kick things off, might be the Apple news out there. So you want to pay attention to this area, of course, and if you're paying attention, when I mean paying attention, if you're watching actually the chart, if you're watching us on TigerTV, you'll see that one of these aspects came in on December 19th as the market was moving up. In fact, that candle on December 18th, very bullish candle out there as the S&P was taking out the swing points from the November 2012 time frame, and you did have a market reversal. In fact, it was the reversal that went ahead and made the retracement down into the November 16th time frame out there. No, I'm sorry, the December 31st time frame out there. My apologies. The November 1st Venus-Uranus, let's see, that was when there was an opposition. You had the move down in the November 16th time frame out there. So, number of things happening in the skies. Of course, on Friday, we did have a new moon come in as well. So a little cluster of activity. Let's go back and take a look at Apple out here, see what it is doing right now. Trade out at 502.19. Let's go take a look at back to the short-term chart here. Let's look at the 5-minute chart. And 5-minute chart, really just still trading inside the downdraft with high volume. That was that open. That is the range of 503.74 down to 498.51. I suspect we'll see that 498.51 be tested here within the next half hour to an hour or so. Let's go take a look at, so right now you've also got the DAX giving up its gains, just about to turn, just did turn negative. You've got silver giving back some of its gains now, down up 41 cents. It was up about a little over 2%, now only up 1 3/10. We didn't take a look at bonds, so let's go take a look at James Bond out here. You got bonds traveling up into their next resistance area, and that is going to be the gap down from January 2nd out here. That high, 145.1. So you've got a little open, untested gap and window out here. If bonds can close and above the 146.1 level, they will go ahead and travel up to the top of the gap. That would be the December 31st low. That level, 146.23. You can see that bonds here off of the most recent set of swing points, which is the high of December 28th, down to the low put in on January 4th. As it moved down into that oversold territory, what it did last week, it got to that 0.382 level, formed a little bearish candle on January 10th, and that was Thursday, and then Friday rejected that level. Now, potentially even making an A to B equals CD up. Stay tuned, folks. Money Masters show is up next, and then Basil Chapman from 11 to 12. Larry Pesavento today from 12 to 1. Daryl Martin 1 to 2. David White 2 to 3. Ken Shreve 3 to 4. And none other than the Tom O'Brien Show from 4 to 6. Thanks so much for being here. If you're off to start your Monday, have a great day, a great beginning of your week. I'll see you in the morning. Otherwise, see you in a few. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.